Hi, everyone.
Hi, thanks for joining us this Tuesday evening. We'll be getting started shortly.
Hi, Sinting. Good to see you. Hi, everyone.
Hi, thanks for joining us this Tuesday evening. We'll be getting started shortly.
Great. It's 7:01. Why don't we get started? Thank you, everyone, for joining us tonight on a Endowus Cash Smart update. And it's really about, finding where this fits in your overall wealth picture. So presenting tonight is myself, Gregory Van, founding partner of Endowus, and Sin Ting, our chief client officer. Sin Ting, do you want to say hi?
Hi, guys. Thank you so much for joining us tonight.
Great. Just before we kick off into the content, if you have not already subscribed to our YouTube channel, please do so below. We have a wide-ranging, content where we talk about important things in personal finance and investing. We have invited fantastic guests onto the show. Bottom right here, Val Yap, founder and CEO of PolicyPal. On the left here, this is Mr. Lu Ching Chuan, the founder of the 1M65 CPF movement. So that's 1 million with your CPF by being very systematic in your approach. On the top, we've done webinars with Dollars and Cents. And on the right, we've also invited some of our fund management partners like Dimensional and PIMCO to talk about their products. Our webinars are typically on a weekly cadence on a Tuesday or a Wednesday night. You can subscribe below at the subscription button. Really exciting announcement next week. So mark your calendar for Wednesday at 7 p.m. Sam and I will be talking about some new features on the Endowus platform that will help you get to a personalized portfolio that is most suited for your goals. Really quickly on Endowus, and we love to remind our viewers and our readers and our clients of this, of the way we play a role in your life. And that really comes from a very simple mission. And it's a mission that came from a personal pain point that we wanted to solve. So it's about helping people invest better so they can live easier today and live better tomorrow and through retirement. I mean, just a personal story, a lot of people have very different wealth journeys, and there are a few proven evidence-based ways of investing. And there are a lot of pitfalls along the way, and a lot of different people or different advisors or different strategies that look shiny at one point, but may not be sustainable for the long term. So we're really trying to help people match their money with their life so that they can live better. As a result of our mission, today Endowus is the first and only digital advisor for CPF, SRS, and cash. We are licensed by MAS. And there are really three, I think, key points that help us serve our clients better. Number one is access to better products. And that typically means accessing them at a much lower cost than if you were trying to access them on your own. And cost is one of the most important things when it comes to investing. And also very importantly, to provide aligned, suitable advice. So Endowus never charges sales fees or transaction fees. We don't make money from you in any way other than you paying us directly. That way, as a financial advisor, we are only incentivized to serve you. Really quickly, myself, founding partner of Endowus. Before Endowus, I was at Grab, where I helped to start the payment and technology partnerships team, starting what is now known as Grab Pay. Sorry, my kids are screaming in the background if you can hear them. Prior to Grab, I was at UBS in the investment bank, covering private equity and venture capital funds in the region, and helping to sell them to sovereign wealth funds, pension funds, institutional investors around the world. So Endowus really came out, for me, it really came from a place of mixing the best of finance and technology, making the institutional frameworks of investing available to everyone so that everyone can invest better. Sinting, do you want to quickly introduce yourself?
Yeah, so I'm the Chief Client Officer at Endowus. I started my career on the wealth management side. So I was in Morgan Stanley in Hong Kong, and then I moved to Singapore about 10 years ago. And my last job before Endowus was at Nomura. So I covered mainly high net worth individuals, family offices, some nonprofits, and smaller corporates as well in my role, and mostly for the Singapore, Malaysia, and Hong Kong markets. And one of the reasons why I started Endowus was that, I knew that there was a better way to manage your wealth. The wealth management industry here is very transactional driven. And like Greg mentioned, this idea of alignment was really missing in a lot of what I had seen. I just thought, there must be a better way to do it.
Great. And I'll just introduce one more person before we move on. So Sam, who, if you've been to our prior webinars, is always writing and talking and teaching. So he's another co-founding partner of ours. He's our chief investment officer. Before Endowus, he was with Morgan Stanley for 17 years, and his last role there was its chief executive officer, so CEO, and chief investment officer, CIO, for Morgan Stanley Investment Management for all of Asia. So Endowus provides a fully digital wealth experience, but we always tell our clients that if they want to talk to a real advisor, they absolutely can. We are here at your disposal. We have, I believe, over 8 licensed MAS reps, and we talk to clients every day, and we really love doing so. Sinting, I'll hand it over to you.
Today, we really wanted to focus on the role of cash management in your portfolio. I mean, most investors, they hardly talk about the role of cash when they think about their investing strategy. And it's not really surprising because, people who think about their investments, they think about how large their portfolios can grow. And when you think about that, the most exciting thing is like stocks. They can double, triple, like 10x, right, if you hold them long enough. But when we think about our total wealth portfolio, cash is really an important part of this. And if we want to manage and grow our wealth as efficiently as possible, we can't neglect cash. And so what we want to talk about today is how you can maximize your cash in an intelligent way. So cash management is really an important part of financial planning, and it should be a part of everyone's holistic investment plan. And the goal here is really to manage your emergency funds, your rainy days funds, right? And also your savings for your very short-term goals. And additionally, people have used savings accounts, fixed deposits, saving bonds for this portion of their cash. But in today's low interest rate environment, when these products are yielding, close to zero, we need to find better alternatives out there. And, holding too much cash is not necessarily a good thing for your portfolio. If you look at the chart on the screen, and just to note, right, these numbers don't even take into account inflation. You leave your money in a current account yielding 0.05% versus a cash management product ranging from about 1 to 2%. This difference here really compounds over time. And also showing an investment portfolio here just for comparison. But what this chart really shows is that, the longer you have excessive cash, the more this difference compounds and the more inflation will also eat into your cash. So, the question is, how much cash should you be holding? I think it's a very, natural impulse to try and hang on to as much cash as possible. After all, it's what we use on a daily basis, and it is very gratifying to see your cash balance, stack up. And the idea of being very flexible, of having this flexibility of having a large cash balance can feel very safe because you're not as affected by market instability. But the truth is, this idea of cash drag is very, very real, right? We're not telling you to invest everything. We do encourage people to stay invested as long as they can because timing the market is difficult and your returns will be higher if you stay invested over the long term. But it's still important to leave a portion of your portfolio in cash. The idea is that you need to be very deliberate about how much you're leaving in cash and how you manage this portion of it. So where is the line between, if you just go back to the last slide, how much cash you should hang on to and how much you should invest. So there are a couple of factors to take into consideration. And the actual dollar amount isn't really a fixed kind of point, right? It changes over time, kind of depending on how much money you have coming in, what kind of expenses you have and what opportunities you have coming up. But a few things that you should think about is firstly, your age. All things being equal, the older you are, the larger of an emergency fund you need to have. If you're fairly young and you have a very long investment horizon, for example, you might be very comfortable with 3 to 6 months, for example, worth of expenses. If you are a retiree that is dependent on your investment portfolio for more regular income, then you may need more cash than that to really having to avoid selling assets when markets come off. Another factor is, your job. The more stable your job is, probably the lower the size of emergency fund you need. For example, if you are, a highly experienced software engineer, right? Your fairly stable job, it's 3 to 6 months is probably enough for you. If you are in maybe in the aviation industry now, you may want to have a slightly larger buffer. And a third factor is how much investable assets you have. The larger amount that you have, the more, the larger buffer you can to withstand a significant loss and still have enough to cover for any, unforeseen circumstances. And the last factor is just your own needs. Everyone has unique circumstances. You may need to look after your family or your parents that have other financial needs, so that's something to take into account as well. So at Endowus, we like to think of our money in different buckets, your CPF, your SRS, and your cash. And all your different buckets of money is working towards your goal. So the first bucket is, your rainy day funds. It's money that it's for your cash flow needs in the very near future and within the next year or so. This should be the safest part. You can take very low risk and volatility in this bucket of cash. The next bucket is for your cash flow needs in the next, 1 to 5 years. So still pretty near term. So this bucket of money should also be in a more conservative portfolio with a higher, fixed income allocation so that you avoid permanent capital loss when you need the money. The third bucket is your more midterm cash flow needs. So over the next, I would say 5 to 10 years, you can take on a little bit more risk in this portion. So you can take on a little bit more equity allocation here. But obviously it also depends on the nature of your cash flow. And the last bucket is really for your long-term goals, for your cash flow needs in the long term. And we think of long term, we think of like 10 years plus. And in this bucket, you can take on the most risk to really capture higher returns over the long term, because with a longer investment horizon, you can also ride through different market cycles. And so we Endowus, we recently launched Cash Smart in July to really solve the issue of that first bucket, the rainy day funds, right? So these are cash management solutions to help you manage your very short-term cash needs. Now, there were a few things that we thought were very key when we designed this product. Firstly, it's liquidity, right? So all our products have daily liquidity. There are no lockups, no limits on transfers. So you can redeem and withdraw the funds as and when. The second thing is yield. So we're looking at kind of 1 to 2% projected yields, which is very competitive now versus different bank deposit rates. And the third thing is safety. So in our cash management solutions, we have combined cash, money market funds, as well as very short duration, high grade fixed income funds to build our products. And the last part is obviously fees. So we don't take any sales fees or transaction fees, and we rebate any trailer fees that we receive from fund managers back to you. So these were the things that we had in mind when we designed this product. If you go to the next slide, Greg. So this is just an overview of our two cash management solutions, Core and Enhanced. So Core is built on two funds, the Fullerton Sing Dollar Cash Fund, which only invests in institutional fixed deposits, as well as the Line Global Enhanced Liquidity Fund, which is a money market fund with very, very short duration fixed income securities. So we're looking at a sort of net target yield of about 0.9 to 1.1% for Core. Enhanced is built on the same Line Global Enhanced Liquidity Fund, as well as a very short duration fund managed by UOB called the UOB Sing Dollar Fund. And this, for the enhanced portion, we're really looking at cash needs that are maybe at least over a month away, right? And we're targeting net returns here, net yields here of about 1.7 to 2%. So what Cash Smart is really, a multi-manager portfolio of very, very high quality institutional fixed deposits, money market instruments, and ultra short duration fixed income instruments. And the goal of this is to really get you safe and efficient returns for your rainy day bucket of funds. And then I'm going to pass it on to Greg, who's going to talk a little bit about what interest rates now are, as well as how our cash management portfolios have performed since launch.
Thanks, Inting. So one quick point I just want to emphasize before I move on here is that at Endowus, as your advisor, it's really our job to constantly be looking at all of the solutions the entire finance industry is putting out there and creating solutions. So all the funds that are available in Singapore or around the world, and creating portfolios or creating solutions that make sense for your individual investor needs. And we do this across CPF, SRS, and cash, from what Xinting mentioned, that longer term bucket where you can take on more volatility or take on a more equity risk, to something that might be 20% equities and 80% fixed income. So we work with managers like Dimensional, PIMCO, Vanguard, Schroders, First State, et cetera, to construct these portfolios. And in many cases, we actually work with the fund managers, so work with our partners to bring products that maybe did not exist for retail investors in Singapore. We bring them into Singapore and make them available through the Endowus platform. Now, we don't have any magic. And I think that's very important for people to realize, right? When we are telling people these are the target returns, 0.9 to 1.1% for core, enhanced 1.7 to 2.0%, we are writing them as ranges because we do not know exactly what the return will be. This is the projected yield based on the latest available information that we have. And as interest rates change, the cash smart portfolios will be affected. But what being efficient means is that we will be able to return a spread on the, what is considered the very, very safe assets of maybe the Singapore savings bond, for example. So since Cash Smart has launched, and of course, since the beginning of the year, catalyzed by COVID-19, we have seen interest rates around the world fall dramatically. Singapore interest rates are the lowest they've ever been in sort of recorded history. So without a doubt, the Cash Smart portfolios would be affected by this. We try to be, or we are extremely transparent about the Cash Smart portfolios and how they change over time. So this is the yields of the Cash Smart portfolios. So that's the dark blue and the light blue versus the underlying funds in the Cash Smart portfolios and how they have changed over time. So we launched Cash Smart 1st of July, 2017. We launched Cash Smart 1st of July, 2020, and this is how the yields have changed. We updated these numbers at the end of August. And we published this information. On our Cash Smart landing page, endowus.com/cashsmart, and we have a detailed breakdown of how we get to the net yield of about 1% and about 2% for core versus enhanced. Now, we think that this is very competitive in rate, but we're not telling you we have some magic potion or we're doing any, crazy calculation, or there's like an insurance product behind it that locks up your money, or we are forcing you to, credit your salary into Cash Smart or anything like that. Cash Smart is an investment portfolio of very, very safe assets managed by the biggest and most institutionalized Singapore dollar asset managers that exist. So that's Fullerton, which is a subsidiary of Temasek, Lion Global, which is part of OCBC group of companies, and UOB Asset Management, which is part of the UOB group of companies. They're diversified, they're very low cost, and we believe that they have an extremely attractive risk-return trade-off for people looking to manage cash. Prior to Cash Smart and similar solutions on the market, it was mainly institutional investors that would manage their cash in this way. But I think, and part of the reason why we started Endowus, I think with the advantage of technology, we can make these types of solutions available to a much larger audience. So Cash Smart and Endowus, that's kind of what we do. That's our bread and butter. Without a doubt, the Cash Smart portfolios are paying a significant spread of multiple times over what you would get in the bank in a current account or in a savings deposit or an FD these days. And we'll go into more detail about that later on in the conversation. But essentially, what you earn in Cash Smart in 1 month is equivalent to what you would earn at the bank over the entire year. And this really matters. We looked at the bank websites, and current CASA accounts, as they call it, or current account savings accounts, are on average returning about 0.05% right now. That means if you invested $100,000 or you put $100,000 at the bank, you would end up with $50 in interest by the end of the year. For example, if you put that money into core and you were able to achieve a 1% return, that $100,000, you would yield $1,000. Or enhanced, you would yield $1,850, $1,900. So we're talking a significant impact here from $50 to $1,000. But of course, what you have to consider is what risk am I taking by doing this? Yes, it's very convenient. Everything can be done online, account onboarding, wiring money in, so on and so forth. But what risk am I taking by participating in Cash Smart? So, we like to be extremely transparent about performance. This is the performance of Cash Smart since launch. In fact, the return has been higher than what we had projected at the time of launch on July 1st. We've experienced no days of drawdowns for the core portfolio as expected. And we've had 3 days of drawdowns for the enhanced portfolio of under 0.02%. In each instance, the portfolio returned to its prior highest balance within 2 days. So that's 0.02%, 3 instances of that. So there are 3 days where the portfolio went down by 0.02%. And that is what we are talking about when we say, how do you pick between core and enhanced? So here we say core is unlikely to ever have a day of negative performance, whereas enhanced, we think is for money that you need from 1 month to 12 months from now, because it may have periods of negative performance. And what you get by taking this compensated risk or this extra volatility is you get a higher expected return. So it's our job as your financial advisor and as a wealth platform to ensure that your portfolios are efficient in getting compensated for the volatility taken. And enhanced and core are good examples of that at the very safe end of investing. Now, what's really important to note is, and I'm sure a lot of you guys already know this, but as interest rates rise, the price of bonds fall, right? So basically, if, for example, let's give a more practical example. Let's say that I am company ABC and I issue bonds to Sinting that yield 4%. So I pay Sinting 4% per year on this bond, and then I repay the entire bond after 5 years time, in 5 years time. If interest rates go up, then if I need to issue bonds again, I likely have to issue those bonds at a higher interest rate because the interest rate of the entire market has gone up. Therefore, that 4% bond that I previously sold to Sinting now tries to sell it to someone else, and the price, rather than $100, maybe has dropped to be equal to the new bonds I'm issuing at 5%. So if we reverse this into the environment that we're dealing with currently, and what I will show you about Cash Smart performance in the next page, which has been better than expected from when we launched the product or when we launched the solution, we're in an interest rate falling environment. And therefore, the prices of bonds have actually been going up. So what we've ended up with is, we launched Cash Smart in the beginning of July, and in July alone, Cash Smart Enhanced had an almost 0.4% return. Now, if it had maintained an 0.4% return for the entire year, it would have returns of over 4.6%, but that's unrealistic. This was driven largely because yields were continuing to drop, and therefore the bond prices were going up. And if you had invested in Cash Smart in that period of time, you would have captured that additional return from the bond prices increasing in price. Similarly, core had a return of 0.12% in July, or an annualized return of 1.5%. So thinking, from July 1st until August 30th, so for 2 months, Enhanced had a return of 0.67%, Core had a return of 0.25%. We had projected returns of 1.9 to 2.2 at that time and 1.1 to 1.3%. If we annualize that 2-month return, we would have an over 4% return and a 1.5% return. But as we said, when we projected this, this is information we got from the fund managers and from our own research to get to these projected yields. And as a result of the bond market moving and the general interest rate market moving, people who invested at that time actually ended up with a higher return. So really quickly, I just want to step back to this slide. So as these things change over time, the returns will absolutely change. But the way we've constructed core and enhanced, we believe are very, very safe alternatives to cash, which is why we call it Cash Smart, that will yield a spread on what you might get in your CASA accounts. Core and enhanced, there are a number of products in the market. We've listed a few here. The underlying funds of the products are largely the same across most of the players. We think of core as a very, very safe, very low volatility, very steady growth portfolio. So we've put it here, and we show you that Money Owl is using a similar fund. Money Owl is using the same fund for their Wise Saver portfolio. iFast is using partially the same fund for their Auto Sweep portfolio, so on and so forth. The Lion Global Enhanced Liquidity Fund, again, is very popular. It's in both of our portfolios, and it's being used by iFast and Stashaway. And then Grab is also using the Fullerton Cash Fund, so the same fund that's in our core portfolio, as well as the United SGD Fund. So we think of core as a very high quality, well-constructed portfolio that sits at the very safe end of the spectrum, and enhanced as probably the higher yielding, higher target return portfolio that is for that 1 month, 12-month cash. Fees for the Cash Smart portfolios are incomparable basically with most other options. We've worked hard, and Endowus started what we call the 100% trailer fee rebate policy. So anything we receive from product providers, we pass on to you as the end client in its entirety. And this money is typically what is kept by distributors or low-cost platforms, and that's how they make money. But we have a problem with that because it immediately incentivizes me as a platform or me as an advisor to sell you product that will pay me the highest fee. So Endowus is really sort of carrying this weight of doing 100% trailer fee rebates. And what we end up with is a significantly lower cost of the core and enhanced portfolios versus many other options, or even doing it on your own in Singapore. Sinting, why don't you go ahead and talk about?
Yeah, just to add on a little bit. So the trailer fees that Greg was talking about actually embedded into the fund level fee. And so on a quarterly basis, we receive these trailer fees back from the fund managers, and then we rebate it back to clients' portfolios. And this fund level fee is actually embedded into the daily NAV or the daily prices of the fund. So if your fund is trading at $20 today and $21 tomorrow, that has already taken into account this fund level fee. And the funds that we use on our portfolio, they're available on other fund platforms as well, on other DIY fund platforms. But the cost of accessing these funds via Endowus Cash Smart is still much lower, right? If you look at these charts, so we charge an access fee of 5 basis points. So for core, for example, the net fund level fee is 18 basis points plus our access fee of 5 basis points. Is still much lower than if you try to buy these funds on your own on another fund platform, which would not rebate you the trailer fee. And plus, they usually tack on another, some kind of platform fee of about 20 basis points as well. And it's, these are really quite significant differences, right? This like 40 basis points difference when your net yield is only close to around 1%. And so when you think about, where to park your rainy day funds, how to manage your cash, security is such an important concern. And so for our clients, what we do is that when you open an account on the Endowus platform, we will also open an account for you in your own name at UOB Kay Hian, which is Singapore's largest broker. So all of your assets are held in your own name at Kay Hian. And UOB Kay Hian is also our, they also execute all our trades. But you manage all of this on the Endowus platform. So you make any investments and redemptions on the Endowus platform, and on the back end, we will execute all this with Kay Hian. And on a monthly basis, Kay Hian will also send you statements. So all the funds, on our platform, they're managed by some of the largest fund managers out there. So Endowus doesn't actually manage the money ourselves. So what we do is we leverage on the expertise of these fund management companies who have been, managing like cash for institutions for decades. So as Greg mentioned before, the 3 fund managers that we have partnered with are Fullerton, which is a subsidiary of Temasek, which is partially owned by Temasek, Lion Global, as well as UOB Asset Management.
So, we've launched Cash Smart for about 2+ months, and we entertain questions from clients on a daily basis, many of which I think are very valid, and we wanted to address them today on this webinar. So, Sinting, pretend I'm a client. How should I decide between Cash Smart Core and Enhanced?
The Cash Smart Core is for the cash that you need in the upcoming days or weeks, right? It's very, very unlikely to have a day of negative performance. Cash Smart Enhanced is for the money that you need for the next kind of at least 1 month to like up to 1 year. It has a little bit more volatility than core. There's no free lunch, right? If you want extra returns, you have to take that extra amount of risk. It is quite rare that it has periods of negative performance. As Greg mentioned, there have been 3 occasions since the launch of Cash Smart where there were drawdowns of less than minus 0.02%, and it had recovered to its previous NAV within 2 days. But that's just something to keep in mind when you're deciding whether you want to allocate to core or enhanced. And for me personally, how I like to, and I'll show you a demo of my account at the end, how I've allocated money to core and enhanced is that I've parked money that I'm looking for a real estate purchase in the next kind of month or 2 into core. And then I've parked money that I know that I'm not going to need in the next at least 2 to 3 months into enhanced. So it's not about deciding, it's either just one or the other. It's how you want to bucket, or you can bucket or split your money between the 2 portfolios.
Great. For me, for example, I put all of my money into enhanced, and because I can tolerate the small volatility, and I know that I don't need to take all that money out in one go at a particular time. So I have about 6 months of working capital, school fees, rent, so on and so forth, that I use my enhanced portfolio to pay for. And when I need to pay those fees, I just make a withdrawal on the Endowus platform, and then about 5 to 6 days after I make that withdrawal, the money ends up in my bank account and I can use it for whatever other purposes I need. I've actually gone to the habit of also withdrawing the money just before having to pay my credit card bills. So my bank account, as a result, has next to no money in it, which is the way that I run my cash very, very efficiently. So is there a risk I could lose money? Why don't I'll start off on this one. So we get a lot of questions around, what would happen in sort of black swan events. And I wouldn't say we're lucky to have gone through COVID in the recent period and therefore a huge shock to the credit markets. But, going through COVID, in a sense, tests the durability of these portfolios. COVID was in terms of the bond markets and what they call, the bid-ask spreads, which causes bond prices to fluctuate. So everything is a matter of the supply and demand of money. And basically the supply of bonds was far greater because people had to liquidate, was far greater than the demand for bonds, even extremely high quality bonds when in the middle of March. So what the enhanced portfolio saw during the COVID shock was a less than 1% decrease in value. And it took about 50 days for the enhanced portfolio to recover from that shock. So we want to point that out to everyone that, in a tough situation where, humans love to say, well, statistically, that should never happen. But when we're operating in the live markets, these types of things happen. I mean, GFC statistically should never happen as well. COVID statistically should not happen, but these types of things do happen, and they happen about once or twice every 30 years. So we've experienced this, twice in the last 20 years now. So I think, it's important to note this volatility and then the amount of time it took for the markets to normalize and recover from it. What I want to use as a comparison is the Bloomberg Barclays Global Aggregate Bond Index. So this is the most commonly cited bond index in the industry, which covers both government bonds as well as corporate bonds across the spectrum in terms of quality of credit and across the spectrum in terms of duration. During the COVID shock, the Bloomberg Barclays Global Aggregate Index went down by 10% from peak to trough, and it took 136 days to recover. So we have funds in our core portfolios, for example, our 100% bond portfolio or our 20% equities, 80% bond portfolio. We have bonds that sit in this level of volatility, and this is how those portfolios reacted. But relatively speaking, the core and enhanced cash smart portfolios are far safer because they are taking less duration risk and less credit risk, investing in investment grade corporates and governments only. So this is, I think, a very good visualization of the trade-off between volatility and expected returns. I believe there are some questions in the YouTube chat that also alluded to that. So I hope that helped to answer some of those questions. One question from KH Yap is, would you have a list of the issuers that United SGD Fund has in its portfolio? Are these investment grade corporates? The United SGD Fund has investment grade corporates and governments. And when you create your Cash Smart portfolio, we'll actually show you the top holdings of the portfolio, so you can see who the exact issuers are. In the same way that when you create a portfolio for the for the Cash Smart core solution, you can see the top deposits that are held by the Fullerton SGD Fund. So the Fullerton SGD Fund only invests in, invests primarily in institutional fixed deposits at all the banks. So they get a better rate because they're larger, and then they also have liquidity, so you can take them. There's no lockup for that fixed deposit because they have many fixed deposits that are constantly rolling over. So they manage that, what you call liquidity, so that you have the flexibility but can still achieve the higher fixed deposit return. So when you create your portfolio on the Endowus platform, and you can do so at endowus.com, or if you have an existing account, you can just add a goal and add a Cash Smart. You will actually see all this information. You will see who the top issuers are, their geographic exposure as well. So a question we've gotten a lot of is, how is interest credited to my Cash Smart portfolio?
Maybe I'll take that one, Greg.
Yeah.
For your Cash Smart portfolio, any interest or returns is reflected in the daily NAV of the funds. So you won't get a distribution payment out per se, but the value of your fund will change over time. So for example, if your NAV of the fund is $1 today and it's $1.05 like a couple of months later, that change in the NAV, that already takes into account any of the interest gained in your underlying funds. And just to note, right, so the projected net yields, for example, for enhanced is about 1.7 to 2%. But that doesn't mean that it's linear. So it's not 2% over 365 days. So this can fluctuate from day to day. And obviously, as Greg mentioned before, this is a projected yield based on the latest information that we have from all the fund managers. But this can be revised upwards or downwards at any time, depending on where the market is, where interest rates are. But we do try to be as transparent and upfront with clients as possible. And when there are any changes, we will update it on our landing page on a monthly basis.
So this is a snapshot of an actual live customer's account who invested $20,000 on the 3rd of July. And as you can see, this is an enhanced portfolio. There are fluctuations. Sometimes it goes up faster than others. This takes into account long weekends, for example. This is a small dip of under 0.02%, which we mentioned earlier, and it's been crawling up in a relatively linear fashion. This is a 2.5-month return, and in that 2.5 months, we're looking at a 0.82%. So this is what I mentioned earlier in the presentation around the returns having been higher than expected because bond prices have moved up as yields have come down. So all of that is reflected in what our projected yields are today, how they've been changing over time. So perfect lead into the next question: will projected yields fall lower? And this is a replica of the slide earlier in the presentation. With interest rates moving the way they are, and we don't have a projection, or we have no idea where interest rates will go from here. People have hypotheses, but the market, we believe, has, for the most part, taken all those hypotheses into account to give us the bond prices at what they are today and what yields are today as a result of those bond prices. So, yes, projected yields have certainly decreased since we launched Cash Smart. We have no idea when COVID vaccine is coming out. We have no idea when life will return to a more normal circumstance, when governments will stop printing as much money, when there will be less quantitative easing, so on and so forth. We don't know when these things will happen. But what the Cash Smart portfolio does is it ensures that you have a spread and you are being compensated for that volatility you're taking. You're being compensated for that perceived risk that you are taking. So interest rates, as they move, we will update our platform. We will update our marketing sites. We'll be extremely transparent. We're constantly collecting new information from the fund managers, and we will keep you updated. as things progress. Again, the relationship between interest rates, bond prices, and yields. So what's the difference between Cash Smart and fixed deposits, and which is safer? I think there are two parts of this question. One is, what is a fixed deposit? And then what is Cash Smart? And in a way, I actually think that you can approach it from two sides. One side, and I want to highlight this, is that Cash Smart is very diversified. And by being diversified, I actually think you are protecting yourself from those very, very scary situations of the whole world going down and perhaps a bank defaulting on deposits. So what happens if a bank defaults on deposits? Let's think about what a bank is. They collect your deposits and then they lend them out. Maybe if I'm a bank, I collect your deposits, I lend them out, I pay you an interest on your deposit, but I'm collecting higher interest from maybe Sinting for her mortgage, or maybe Sam for his late credit card bill, or so on and so forth. And I will earn the spread of that deposit interest that I pay you, and the risk I'm taking on these people, which earn me a higher interest rate. So that's what a bank is. But if they don't manage this risk properly, and Sinting cannot pay her mortgage, and Sam never pays his credit card bill, and the corporates they lend to default, and so on and so forth, there is a situation actually where the bank we can default on your deposits. Now in Singapore, we have something called the Singapore Deposit Insurance Corporation, SDIC, and essentially for every bank account you have, they will guarantee $75,000 of your deposits being returned to you. So when you have a bank deposit, you're not taking on maybe direct credit risk, but you are taking on credit risk that the bank is taking on. And that, your cash is guaranteed up to $75,000. There's concentration because if the bank is mismanaged, you could get into trouble. With Cash Smart, you have hundreds of issuers across Singapore and Asia. You have bank deposits at multiple banks. So if one bank goes down, you will be okay because not all your money is in that basket. Yes, perhaps the underlying corporates may or may not be riskier in terms of credit than the bank where you hold your deposits. But in our view, we are taking very calculated risk, very diversified risk. So I'm not going to give you for me, I think that Cash Smart is safer because of its diversification. But we have many clients who say, you know what, I still think my bank deposit is safer because it is a deposit. And we can't argue with that. The banks are very good in Singapore. They're very well capitalized, and the likelihood of a default is extremely low. But then we say, are you comfortable taking on more diversification, perhaps more perceived credit risk to get a higher expected return? And that is when Cash Smart, I think, makes a lot of sense for you.
Maybe just one thing to add on to that is that, when your Cash Smart is not a deposit, right? When you're comparing Cash Smart versus your bank deposits, one thing to think about is liquidity. Your fixed deposits are locked in for a certain period of time. And I think you should actually be paid a premium for this illiquidity, right? With Cash Smart, there is no lockup. So you can hold it for 1 week, 1 month, whatever, 6 months, for as long as you like, and you can redeem as and when. I think that is also an important difference to think about.
Great, thanks, Sinting. So, really quickly, a recap on what Endowus Cash Smart is. Up to 2% projected yields with the enhanced solution right now, but as we've been talking about, that can change over time. It is a very efficient way of managing your cash to get a higher expected return and take on very little risk. You get daily accrual of interest rates, no lockups, unlimited transfers. There are two options, so core and enhanced, based on your actual cash needs. It's low cost. There are no sales fees, no transaction fees, no additional fees from your custodian, UOB Kay Hian, and you get 100% trailer fee rebates. And basically, it is a fuss-free way of efficiently managing your cash. Really quickly, switching gears, we wanted to just show you, this is the Endowus Cash Smart landing page, and please excuse my very large face on the right-hand side. You can read more about Cash Smart here. Much of what we discussed today. When you should be cash smart, the two choices there are, we showed you this chart earlier on as well about how we get to those projected returns, as well as many FAQs at the bottom for your cash smart portfolio. So if, for instance, I wanted to create an account for the purposes of this demo, you will be presented to onboard. You have a choice to onboard my info or complete the form manually. As I already have an account, this is a demo, I will select to complete the form manually. Here, you will be presented with either starting your first investment goal with Cash Smart or with general wealth accumulation, where you can invest your CPF, SRS, and cash in efficient, globally diversified portfolios. So I will opt for Cash Smart, as that is what we were talking about today. Let me just get rid of this thing here. With Cash Smart, you can invest your cash, savings, or your SRS. We'll say cash, put in an initial investment, and I can either pick core or enhanced. If I pick core, you will quickly see that we have a full breakdown of the fees, the trailer fee rebate we provide back to you, the fund level fees after rebate, and then Endowus's access fee. So this is the only money that we're making from you on this portfolio per year. The underlying funds, what they entail, you can link out to the prospectuses and their product highlight sheets, and then what's actually in the portfolio. So, how it's allocated in terms of countries, how it's allocated in terms of sectors, where your holdings are across the various banks, so on and so forth. If you're happy with this, you simply say continue with onboarding and continue filling out personal information so that we can onboard your account as a fully KYC'd and operational account. Finally, let's say you've invested with Endowus for some time. What do you see inside the Endowus platform? As Sinting is here, we can go into her account, and this is her live account. You can clearly see on our dashboard all sorts of information that would be useful. This chart looks a bit funny because it embedded our investments and redemptions. So Sinting had to make a redemption for something actually very exciting that just happened in her life, but we're not going to share that. And a large purchase to better her livelihood. And so therefore, you'll see the value of the chart decrease on that day. But what you can see here is, the daily value of Sinting's portfolio, her various accounts working towards various goals. So there she has core and she has enhanced.
And we just to jump in here, there was a question earlier from Edwin of, whether a very conservative portfolio or cash smart is better for keeping money that's needed for 2 to 5 years. So as you can see, I have a goal that is cash 100% bonds. So for me personally, for this money that I am targeting for kind of 2 to 5 years, I have put it in a 100% bond portfolio rather than putting it in cash smart. But just to share with you guys, another product that we will be launching pretty soon, it's called the Ultra Defensive Portfolio, which will sit somewhere in between cash smart and 100% bond portfolio in terms of risk and returns.
Yeah, so this is the 100% bond portfolio, which Sinting just alluded to, and it has a much higher expected annualized return, but also a significantly higher standard deviation than the cash smart portfolios. What I want to point out here is on the platform, you can see very quickly, the expected returns of all the portfolios for cash smart and what we call general wealth accumulation. So quickly talking about that 100% bond portfolio versus cash smart, what you can see is, a much larger dip in the COVID era. But this is not the cash smart portfolio, because in this 100% bond portfolio, and yes, they are also invested in bonds, they are able to take more risk within the fixed income as a whole. So taking on slightly more credit risk, taking on more duration risk, still being very efficient to capture higher expected returns. So we were targeting, 6% for this. This particular portfolio is built on 3 PIMCO funds and one dimensional fixed income fund. Great. We've just passed the hour. I'm going to quickly take a look at any questions that we have.
Okay, so I see a question from DMC Lim. Is there a compounding effect for cash smart? Yes, there is. So if you invest $100 today and you make 2% returns, you have 102 at the end of the year, your cash smart yield will be based on $102 in 1 year's time. So it's the same as any other investment portfolio in terms of compounding effects over the long term.
Yeah, so I think that's a great question, and I think that is very much aligned with the way we want to be efficient with our money, and how being efficient is really a goal of, I think, many of our clients, and one of the reasons why we started Endowus. And basically rolling over your returns constantly rather than just getting paid, for example, 2% coupon, and then next year getting paid a 2% coupon, and the following year getting paid a 2% coupon. We really want to make that total return on your entire investment amount. So compounding that return is very, very important across all of our portfolios. So, maybe that question is actually coming from a question maybe that question is coming from something we talked about earlier around, how is my interest rate credited to my cash smart portfolio? I think a lot of people are used to seeing interest received and a dollar value maybe every month from their bank. That is not how the cash smart portfolio works. Right? The cash smart portfolio works because the value of the underlying funds increases as it collects interest that is owed, and it keeps on rolling and rolling and rolling. So we consider this to be a far more efficient way of running money. Now, what we tell our clients to do is, when they need the money, they just make a redemption of the size of the money that they need. So, for example, this client has $20,000. It started with $20,000. Now has $20,163. 2.5 months later, if they needed to buy a new computer, they can just take out $3,000 and buy that computer, while all the rest of their money continues to roll at a higher interest rate. So that's really the right way, we believe, of using Cash Smart. Yeah.
I see another question from Kate. Yeah, regarding leverage. So all the funds in Cash Smart do not use leverage.
Great. So we're past the hour. If you enjoyed this content, please feel free to subscribe below. I think many have also gone to Endowus Insights. So if you go to endowus.com, just log out here. You can go to Endowus Insights. You can see many webinars that we have done with a whole host of guests. Just a week and a half ago, we had Anna Hautanto, founder of the New Savvy, on with Sinting. A few weeks prior, Dollars and Cents, Financial Horse, Policy Pal, Value Champion, and we talk about Dr. Wealth a few weeks before that, and we talk about a lot of products and features and solutions that we're creating at Endowus to help people invest better, to live better. Prior to that, conversations with Dimensional, which is one of the biggest quant funds, systematic quant funds in the world, available now to retail investors in Singapore. PIMCO, the biggest fixed income manager in the world, so on and so forth. So if this type of content interests you, please do visit us online. Please subscribe to our newsletter, and please try out the platform. It's completely free and has no commitments and can be done entirely online from this create account button.
If you guys have any other questions on Cash Smart or anything else on Endowus at all, you can always reach out to my team at support@endowus.com, and we'll get back to you as soon as we can.
Great. Thanks, Cindy.
Thank you guys so much for joining us tonight.
Have a great evening.
Bye.